Now, just moving into the strategies that we can apply within superannuation. The government co-contribution has been a fantastic way, particularly for low-income earners, to boost their retirement savings. That's what it was designed for, and a lot of people have been able to take advantage of it. How it works is that if you put $1,000 of these, remember the non-concessional contributions, into your superannuation fund. So non-concessional contributions are those that you don't pay tax on when you put it in. And I think there's a question later on about, if I salary sacrifice, do I get access to the government co-contribution? No, salary sacrifice contributions don't make you eligible for the government co-contributions. The money needs to come effectively from your bank account and put into your super fund. So if you put $1,000 into your fund, then the government this financial year will match it with another $1,000 co-contribution. But there are some limitations. Your income, your total income, needs to be less than $61,920. And 10% or more of your total income must come from eligible employment, running a business, or a combination of both. So that means if you have earned, let's say, $10,000 from interest payments, for example. You've got a $100,000 investment and it's earned $10,000 in interest, so 10% interest. That means that 10% and for example, you worked and you only earned, say, $800 for the year, then that means that you've not earned 10% of your total income from eligible employment or running a business. I hope that's not the most clearest explanation, but just understand that 10% or more of your total income needs to come from employment or running a business. You need to be less than 71 years of age, and you cannot be a temporary resident visa, a holder of a temporary resident visa, and you must lodge a tax return to actually get it. Now, the other criteria is that if your income or total income is between $31,920 and $61,920, then the benefit of it scales back. So if you, for example, put in $1,000 and your total income is $40,000, you might only get $800 back rather than the $1,000. All the way up to the point that if your total income is $61,920 and you put your $1,000 into your super fund, you'll get nothing from it. So it just gives you an idea of... and there's a calculator on my website that I can provide a link to, which helps you calculate the optimal amount to put into your fund. So if you're earning, or if your total income is between $32,000 and $62,000, then you can use the calculator to work out the optimal amount to put into your super fund to get maximum benefit from the government co-contribution without putting in more money than you need to. The government has announced that they will be reducing the government co-contribution again. It initially started off as being put $1,000 in and the government will give you $1,500 back. It was then reduced to $1,000, so 100% return. Now it's going to be reduced to $500 as of the 1st of July, assuming that everything goes ahead with that legislation. So this financial year, it is $1,000. Whereas next financial year, it'll drop to $500. So just be aware of that as well. So that means if you put a $500 in, you might get $500 back. So it's reducing over time as the government needs to pay back some of the money that it's borrowed. So just be aware of that. But still $1,000 this financial year.